Will home prices drop? Will housing prices continue to rise? When were there going to be more homes for sale? How much does a rate really affect my monthly payment? Aren't there supposed to be a lot of foreclosures for sale at some point coming on the market? You know, sometimes I think it would just be a lot easier to buy land and build a house on it. These are all questions that I talk about with friends and clients alike. So today I'm going to focus on three things: a quick overview of what got us here, what home prices and inventory look like here in Yamhill County, and a little insight as to what the experts are anticipating that we will see as 2022 unfolds in regards to rates, rents, and more, both here and across the nation. Hello and welcome to my channel. My name is Leanne Cray and I am a realtor with Allegiant Realty Group. Thank you for joining me as I share all things related to living in, moving to, buying, and selling here in the heart of Oregon wine country. Now, we all know that the housing market has been crazy this last year and a half, but why?
To put it simply,
supply and demand. And there are a number of factors that have contributed to the amount of buyers on the market versus the amount of homes available to be purchased. I myself focus on four main contributing factors to the lack of the supply and the higher demand. So the first factor was the reduction of newly constructed homes after the crash in 07-09. Prior to that time, you can see that new construction was providing an average of about 1.5 million homes a year across the United States. When the crash happened in 07, building starts just began to drop, which was expected because we had a ton of foreclosures coming on the market and there were just way more homes than we had buyers for. So in the years of 2009 to 2012, new home builds across the nation hovered at about 500,000 homes a year. New home builds slowly began gaining speed in 2012 and construction of more homes could be seen each year. But even so, they still really only recovered to about 1.2 million new homes a year. Well, if you look at the bar across the top, this reflects the amount of homes that had been needed to be built to sustain the growth of population over time, which was about 1.8 million homes a year. You can see how far below we were for so many years. Over this decade plus long gap of construction, a deficit of about 5.5 million homes having been built in the United States was actually created. You combine this with the loss of about 1.3 million homes through demolition, natural disasters, and functional obsolescence. 2021 greeted us with a shortage of about 6.8 million homes in the United States. So according to a report commissioned by the NAR in July of 2021, it was drafted by the Rosen consulting firm. They stated that it would take a 60% increase in home builds, so 2 million homes a year for the next 10 years to be built in order to catch up for the lack of inventory and to account for continued historical growth in population. So how does this affect Oregon? According to the NAHB, the National Association of Home Builders, Oregon over the next 2 decades will need about 583,500 new homes to be built. So just over 500,000 homes in Oregon, and of those, half need to be outside of the Portland metro area in order to meet the anticipated housing between now and 2040. Having now a reference to the lack of supply, the question is posed, why the sudden demand? Factor number 2 of the scale tipping. So the average age of first-time homebuyers has slowly risen from about 29 years old in 1981 to an average age of 33 years in 2021. So why is this significant? We've entered in the Millennials, the largest living adult generation by population that the United States has ever seen. They account for the age groups between 22 and 41. Many Millennials, they held off buying homes in their 20s because we had the recession. And instead, a lot of them have spent the last 10 years going to college, traveling, saving money. Now they've entered the real estate market in great numbers because they're ready to buy their first homes. So this kind of gave us our first influx in number of buyers on the market in the 2020-2021 window. Factor number 3 are the interest rates. So interest rates dropped to historic lows in 2020, and they continue to drop into 2021. At some points, the rates were even under 3%.
No way.
So the drop in interest rates reduced the monthly payment of mortgages, making homeownership attainable for a greater number of buyers than in the previous years. An example that you can see of this, if you have a $360,000 loan at 4% interest rate back in, say, 2018 or 2019, the principal and interest payment would have been about $1,719. Well, as interest rates dropped in 2020 and 2021, more buyers were able to take advantage of these new rates, and they qualified for loans that they previously couldn't. You can see that same loan of $360,000 locked in at a lower rate of 3%. Now a buyer only had a monthly payment of $1,518, $200 less a month. So this became our second influx of buyers on the market. The fourth factor in the supply and demand scale has been due to COVID. As we all know, many of us spent 2020 inside of our homes and parts of 2021 as well. In this changed lifestyle, many people realized two things. One, how much more space they really needed or they wanted, because they wanted to accommodate a home office space or maybe a workout room, more space for the kids, a yard for the kids. They also realized that they could work from home, so they didn't necessarily need to live in a location that was close to their offices anymore. So the desires of both a larger home to meet greater needs, and for others wanting to just move to a more desirable area versus where they needed to live for commuting purposes, this gave us a third influx of buyers that were coming onto the market. So now that we have a picture of how we got here, what does this real estate market actually look like, and what can we expect to see over this next year of 2022? 2021 saw the median home price in Yamhill County rise from $370,210 to $444,380, a 19.64% increase. Now, yes, our median home price is greater than the nation's median home price of about $303,000, but the change in percentage was the same at 19.64%.
Are you kidding me?
Inventory has hovered month over month between 0.6 months to 1 month, meaning if at any given moment we were to sell absolutely everything that was on the market without any new homes coming on the market, how long would it take for us to run out of homes? Most of the year, it would have taken about a half of a month to 1 month if no new homes came on the market. Now, this is actually not just here in Yamhill County, but this is the same for all of the Portland metro area for this last year. Inventory, though, when you actually look at the numbers here in Yamhill County, actually hasn't dropped that dramatically. In 2021, we had 2,142 homes come on the market, which in 29 years was the 8th highest inventory that we've had here in the county. Not the highest, but sure not a super low count of homes for sale historically. And we've had a record year of closed purchases of 1,760 homes, which this is the most homes sold here in Yamhill County since tracking even began in 1992. As a buyer, what does this mean to you? Well, it shows there's a constant revolving door of inventory on the market. So if you're not in a hurry and you're able to position yourself with a pre-approval and money down, being able to find and purchase a home here in Yamhill County is a very likely scenario for this next year, which is great. New construction has been a contributing factor to this inventory. Over the year, we have had at least 10 subdivisions break ground here in the county. Some of the subdivisions, they've sold out over the year. A few are nearing the end of their availability of homes, and there's others that are just starting to break ground. We also have a few subdivisions that are mid-build. They've been building and they are going to continue to be built in phases over a window of a few years. Most of the new homes right now being single-family residences are in the price point of $408,000 to about $850,000, ranging in sizes from 1,500 to 2,700 square feet. There is one build that has identified a section of their subdivision that will be building 51 multifamily style apartments over the next couple of years to additionally house a lower price point as well. So looking forward, there are about 800 plus homes already approved in subdivisions here in Yamhill County to be built around the year, which is great for this year coming up.
It's very exciting.
Another question that I have clients ask when they move here is if they can just go ahead and buy some land and they can have a house built, and that way they can have what they want. And the answer is yes, of course, but it's not as easy as it sounds. Oregon has a very strict land use system. It's known as the Urban Growth Boundary, or the UGB. It was enacted in 1973, and the goal was to emphasize contracting development within urban growth boundaries. So in other words, within the cities and towns, while restricting the development of farm and forest lands. The idea was to protect the farms and the forests from urban sprawl between the cities. Cities have since then been tasked with periodic review requirements to make sure that they have developmental land, but at a minimum that's needed. Anytime growth needs to go past the UGB, the cities and counties have to submit a proposal to the LCDC, Oregon's Land Conservation and Development Commission, showing justification according to 19 statewide planning goals, which all aim to preserve the highest quality of agricultural lands, conservation of the forests and the open spaces, to develop high quality livable cities by increasing the density. They also say to improve the public transportation within the cities and the county, and then encouraging housing close to employment. That's the main goal of it. Finding buildable lots for sale sounds a lot easier than its reality. Once you get outside of the UGB, zoning then takes precedency over if you can or cannot build on a parcel. Once you find a parcel, then the next step is to find out, can it be built on? Can a septic be approved? If you drill, can you get water? And what are the costs for all of these things? Buyers going this route, you can find land, but it is a longer process and a lot of patience is needed. So what are the forecasters, the economists, and the associations in the industry foreseeing for this year? Well, thankfully, they are not expecting the prices to increase at the current course of the 19.6%, which we saw this year, because we know it's just not sustainable. Of course, every area in the nation is a little bit different, and there are more desired cities and towns versus others. But the general consensus is that an average blanket price appreciation of 5.1% will be recognized this year for home ownership. Another topic that I've had questions about is the idea of a wave of foreclosures hitting the market. Truth be told, the experts are really not expecting to see much of that happen and are honestly saying that it really will be a non-factor. If you look at the graph, you can see in May of 2020, about 4.76 million mortgages went into forbearance. But scrolling forward, you can see that as of December 2021, only 890,000 mortgages remain in forbearance. This represents only about 1.6% of active mortgages in the United States, so it's not a large percentage. Now in this chart, you can see here in the green section of those 4.8 million people, almost 39% that went into forbearance at some point during the last 2 years were able to repay in full any payment that had been missed. The blue section here shows us that 44% were able to work out some type of repayment plan. So they either modified their loan, they maybe refinanced it, or worked with their lender and added the deferred payments onto the end of the mortgage term, essentially extending the mortgage by a few months past the original 30-year repayment window. The last 17%, as of November 2021, hadn't quite yet identified their plan. One thing to consider that was different than the housing crash of 07 to 09, though, is that values of homes, as we've spoken about, have actually increased greatly. So there's a high probability of equity in these homes. If people can't make payments or come to an agreement with their lender, then you may see them sell their homes and save the equity, or possibly refinance to a lower rate, resulting in a lesser payment. There's just a lot of avenues for them to work through still before their lender would foreclose. Frank Martell, the president and CEO of CoreLogic, sums this up really well when he said, not only have equity gains helped homeowners more seamlessly transition out of forbearance and avoid distressed sale, but they've also enabled many to continue building their wealth. The last 2 points to touch on regarding what experts are saying that we can expect here in 2022 are rents and rates. Quickly, if you are enjoying this video and the information that I'm sharing, please be sure to like and subscribe down below to be notified each week when I post more videos about all things buying, selling, and living here in the heart of Oregon wine country. 2, if there is anything that you would like me to make a video about, if there's something that you'd like to see or learn, please comment below and let me know. Second to last are rents. Rentals in Yamhill County account for about 30% of our residential properties. As of this month, January 2022, per rentdata.com, the median rental rate for a 2-bedroom single-family residence is sitting at about $1,405 a month. Now, when I ran my own search today, most of what is currently available are 3 to 5 bedroom homes, averaging at about $2,000 a month. In talking about rents, for those of you unknowing, Oregon was the first state in 2019 to pass a statewide rent control bill. The only homes that are exempted from this law are properties that were either 1, issued a certificate of occupancy less than 15 years ago, or properties that provide reduced rents as part of a federal, state, or local program. To note, the exemption is not inclusive of Section 8 rentals. In 2021, the maximum allowable rent increase in the state of Oregon was 9.2%. State economists have announced in September that the rent increase limitation for the year 2022 will be capped at 9.9%. So this is just a little bit higher than Oregon's 22-year average of 9.3% a year. Regarding nationwide, per CoreLogic in 2021, rents had increased to 10.9% over the first 3 quarters of the year. The economists are expecting that increases will continue over the year, and they are thinking 7.1% increase in rents in the nation. Last are rates. So rates hovered during 2021 around 3%. Some moments were dipped below, and you can see that other times they climbed just a little bit above. But for the most part, that 3% window is where we hovered for the year. Projections for the 2022 year are that we will see about 3 rate increases, and they will steadily climb to about 3.7%. Some reports actually even say estimations of 4% by the end of the year. I can say that we've actually seen a small climb in rates here in the first 2 weeks of the year as well. The real question though, when we're talking about rates, is how does it affect your monthly payment? I mean, rates are really just a component. Well, we go back to this chart that we looked at earlier, and we take a look at a loan amount of $440,000 at 3.25%. Principal and interest payment would be about $1,915. Versus later in the year, if rates rise a bit and you say lock in at 3.75%, the principal and interest payment would be just over $100 more a month at $2,038 a month. This reality is expected to slowly reduce some of the buyers' abilities to purchase, and if they're already on the edge of qualifying with monthly payments where they currently stand right now, it would thus essentially reduce the number of buyers on the market. Chief economist of Realtor.com, Danielle Hale, really kind of dialed us in regards to what buyers need to know when she said, buyers should pay close attention to their budget and know how small changes in mortgage rates can affect their monthly costs. To go one step further and really see the true full picture of 2022, if rates increase over the year and homes slowly continue to rise in price as well, buying now versus the cost of waiting to buy later in the year would look more like these figures. So this is based on a home price of $444,000. You have an FHA loan and put 3.5% down. Your loan amount would be $428,460. If you locked in at 3.25%, your principal and interest payment would be $1,864.68. Using the forecasted home price increase of 5.1%, the same $444,000 house would then be priced at $466,644. Same FHA loan, you put 3.5% down. Now your loan amount is $450,311. We estimate a 3.75% interest rate, and your principal and interest you would see would then be $2,085.46. This is a difference in the monthly payments between now rates and now prices versus what the economists are anticipating for fourth quarter of 2022 of $220.78 a month. You spread that over 12 months a year, 30 years in the end, you're paying just over $79,000 more for the same house having waited to purchase. The takeaway: if you have thought about buying a home this year, the earlier that you get pre-approved and start your search, the better positioning that you are setting yourself up for. If you have been thinking about selling a house, right now the competition is extremely minimal and you have the ability right now to sell at top dollar. Yes, values we've talked about are expected to increase over the year, but the added inventory of homes on the market and the reduction of qualified buyers may change the timeline and the price point of what you can sell your house for later in the year. Thank you so much for watching. I hope this has given you a good feel of the market, of where we've come from and where we're expected to be here over this next year, 2022. If you have any questions at all, feel free to reach out to me or comment down below. Tune in next Thursday for our next fireside chat. And until then, have a great week. Bye.